Hello and welcome. My name is Hilda and I'm a librarian here at the Los Angeles Public Library. Today we have Amy Williams from BetZedek who'll be going over a disaster recovery orientation for Los Angeles homeowners. Amy is a directing attorney of the homeowner protection team at BetZedek, a nonprofit law firm. She's been a housing lawyer in Los Angeles for over a decade, fighting against displacement, elder abuse, and substandard housing conditions, and is currently assisting people displaced by the fires. Before we get started, this stream is being recorded and will be available for viewing on the Los Angeles Public Library YouTube channel, which is where you are. If you would like to a copy of the slides, please email us at lifelonglearning@lapl.org, and that is on the screen. We will have a Q&A session at the end of the presentation, so please use the chat box for your questions and they will be answered. Now, I will hand it off to Amy.
Hey, good morning, everyone. Thank you for the introduction, Hilda. I'm happy to be here with you today, presenting on disaster recovery orientation aimed at helping homeowners who have been affected by the 2025 wildfires. We're going to jump right in. I do want to note that if you're putting questions in the chat, those will be part of the public recording later, though. So best not to put any personal information in there unless you want it published online. So first of all, who are we? BetZedek Legal Services is also known as the House of Justice. We're a nonprofit law firm that's been helping in Los Angeles for 50 years. I run the homeowner protection team. We offer free legal services to low-income and elderly homeowners in times of distress when they're at risk of losing their home. We're but one of a coalition of legal services locally that are organizing together to respond to this crisis. In addition to providing direct legal services, we also do community education, which is what we're doing today. So this is an overview of what we're going to be talking about today. Our goal today is to give you an overview of all of the things that you need to consider as part of the disaster recovery process, rather than going in depth onto any specific topic like insurance or FEMA. There are lots of other resources out there to help you in depth on those particular topics. Today, we're going to be talking about disaster recovery and what homeowners should be thinking about in the short term to preserve their financial picture and set themselves up for that long-term recovery. We're also going to be talking about what things to watch out for right now. I'm sure many of you have heard about different scams. We're going to go over briefly how to spot certain scams. And as you may have caught, this information is targeted at folks who've been affected by the 2025 wildfires. The legal resources and laws are changing day by day right now, but we're doing our best to make it current. So essentially, when we're talking about disaster recovery, this is really a financial decision, but it is really helpful to know and understand your legal rights to help your family make the best financial decision for themselves. If you're like many homeowners, your home may be your largest financial asset. The recovery from the fires is going to look different depending on some of the things that you can see on the screen right now, what your insurance coverage looks like, what kind of loan you have if you have a mortgage, and as well as your own financial picture. This is to say that no one else can make the decision for you about all of those questions in your head right now, like whether I should rebuild or whether I should move. It is going to look different for every person. But we really hope by the end of this presentation that we can give you a guide and a checklist for the things that you should be considering as you make that decision. Also throughout this, we want to highlight other trusted sources of information to help you along that journey. So when we think about both the framework for recovery, that's going to involve a lot of different interactions between you and the different agencies or companies that you already pay your bills to, like your mortgage servicer, and interactions between those different elements like your insurance and your mortgage. It's also going to look at potentially engaging contractors and other private vendors to help you clean and rebuild. It will also mean balancing what you need in the short term for your finances and for your family's immediate needs with the long-term recovery and what your goals are there. Ultimately, this is a process that is a long one. It's measured in months or years rather than days. And I'm giving this presentation on January 24th, 2025. As anyone living in LA knows right now, there are fires still burning. So we are just at the start of this process. This is important for a couple of reasons, because you may be seeing things out there saying, you've got to file your insurance claim as soon as you can, act now. While it's true that it's better to begin sooner rather than later, this is also a moment of profound grief, and all of these things may feel very overwhelming. You may not be in a position yet to be able to make these decisions, and you may not be feeling like you can remember or logistically think through these things. That's completely normal, and so it's better to rely on help, rely on checklists and guides, which is what we're hoping to provide to you, and not be rushed into making decisions or advocating for yourself when you are still feeling what's happening in the moment. The other thing to say here is that disaster recovery is not impossible. We know this because there are homeowners across California who have been affected by wildfires in the past, who have lost homes, or whose homes have been damaged, who have successfully rebuilt. Lean on those resources and their stories to figure out how they did it, because there is a lot of trusted information out there already, and that's how we know that it can be done. So thinking about right now, the first steps you should be taking, if this is where you are, and everyone is coming to us at a different point here, but if you haven't yet found temporary housing where you can be as a home base for even the next year or 2 years, that is likely your first step to try and get back that sense of normalcy. Finding housing right now is tough. It's tough for anyone. Your insurance companies and others may not be able to help you find housing, though in past disasters we have seen FEMA step in and provide FEMA trailers or hotel housing. But in terms of finding temporary housing from which you can return to a sense of normal, while your insurance company or others may not be able to locate that housing for you, they can help you pay for it. The other things you should be thinking about in the immediate term in order to set yourself up in the best sense for the long-term recovery is setting up a place to receive mail, because you will need to give a solid and secure mailing address to all of the different agencies you're going to start making claims to. That can be a PO box, but whatever, or it can be working with the USPS close to where your home was to divert your mail to somewhere. But there is going to be important mail coming in with dates and deadlines. So if that's not something that you've done, we recommend doing it to get it out of the way. The other thing right now is that you are going to need copies of certain documents that you may have lost in the fire. If you need to recover copies of those documents, there is a guide in this presentation that will be helpful in allowing you to do that. But also, there are disaster recovery centers open right now where the DMV, the LA County Recorder's Office, and other agencies that hold those documents are available to provide you copies. Now, we're going to talk about insurance for a moment, because it is likely the best way for you to get some short-term financial relief right now to help you as you begin the recovery. The first thing to know about insurance is you are likely going to need a copy of your policy. You can reach out to your insurance company to get that, but just keep in mind that quite often when you request a copy of your policy, they give you what's called just the declaration pages, which is usually 1 or 2 pages, and it looks like a table. That's not your policy. You need the entire policy, including the rider and endorsements. And if you do not want to wait the 30 days for your insurance company to give you a policy, probably the best way to get a copy is to sign up on your insurance company's online portal or on their app and download a copy there. You should be thinking about starting your insurance claims, and you don't need a lawyer to do that. You do likely want to look at a copy of your policy and understand that, and we're going to show you some resources to help you do that. But thinking about insurance in the immediate sense, homeowners who have suffered a total loss from the fires, which means that you can't go back to your home right now, do have some immediate rights. Under typical homeowner insurance policies, there are generally 4 buckets of coverage, A, B, C, and D. There may be more in your policy, and that's great. A, B, and C relate to the structures and the property that you had on your land. A is your dwelling, B is your other structures, C is generally your personal property in your home and on your person. D is what's called loss of use or additional living expenses. And that's to compensate you for what you're spending right now because you can't use your home. So the California Insurance Code provides that if there's been a total loss, the insurance company should give you the first 4 months of your living expenses upfront upon request. The key is that you have to ask for it. Now, this is also to note that once those 4 months pass, you are going to need to prove your expenses in order to get ongoing assistance for your living expenses as you're incurring them. So this is a tip to just start keeping copies of your receipts and your expenses now. Okay. Now, insurance will help in the short term for your recovery, and it's also a big picture of your long-term recovery, but we're going to switch gears to continue talking about the other parts of the short-term financial picture that you should be looking at right now. And the first one is about your mortgage. If you have a mortgage on your home, it is likely the biggest bill that you have. The big picture here is that homeowners are still obligated to pay their mortgage despite the disaster. However, there is relief available upon request. Like any time that a homeowner falls into some kind of financial difficulty, you can get a break from your mortgage servicer. Your mortgage servicer is the company that sends you your mortgage statements. You can get a break from your mortgage servicer as part of the loss mitigation process, and they're required to help you with that. Right now, typically what you're going to be looking at is a temporary financial hardship due to the fires and being displaced, and that is a basis for what we typically see in disaster recovery for mortgages, which is a forbearance. A forbearance on your mortgage payments means that your payments are paused or reduced. They're not forgiven. The other thing that we're seeing right now is that for many kinds of mortgages, for what we call conventional mortgages, which are through Fannie Mae, FHA, and this can also include VA loans, mortgage servicers are by law required to pause any foreclosures for 90 days. Going back to forbearances, it may be that your mortgage servicer is required to give you a forbearance upon your request, but that really depends on the kind of loan you have and the investor behind it. If you know what kind of loan you have, then you may have an understanding of your rights going into it. If you're not sure what kind of loan you have and you need to check, there are lookup tools that are linked on our slides, which will be shared with you later, to look up whether you have a Fannie Mae or a Freddie Mac mortgage. You can also just call your mortgage servicer and ask what kind of relief is available for you. Sorry, I'm just seeing a note that my audio is going in and out, so I'll try to speak up, and apologies if you're not able to hear me correctly. Okay, continuing to talk about forbearances. So as I mentioned, a forbearance is where your mortgage payments are not forgiven, but they can be delayed or reduced due to a temporary hardship. This is also the point to say that if it's not a financial difficulty for you to continue paying your mortgage at the moment, you're more than welcome to do so, but a forbearance is an option that may be available to you right now to give you extra cash on hand for your short-term recovery. Now, the payments that you are delaying or reducing, if you're just choosing to pay part of your mortgage payment, is not indefinite. Generally, it is for a period of 3 months to begin with, and you may need to keep checking in and confirming that you're still experiencing a financial hardship. And the forbearance may go only for 6 or 12 months. All of this really depends again on the kind of loan that you have, meaning that for many mortgages, depending if it's a first or a second mortgage, the relief may look very different, and depending on the kind of mortgage servicer that you have. If you're looking for more assistance with this, you may want to contact a HUD-certified housing counselor in order to get help and figure out how to advocate for yourself. This is also to note right now that a forbearance or a delay or reduction in payments is not necessarily a modification, which means your interest rate shouldn't be changing. We have seen examples of where borrowers call their mortgage servicer and ask for a forbearance, and then they get sent a loan modification packet. That's not really what should be happening. However, because you will still need to cover these payments at some point, at the end of the forbearance period, be it 6, 12, or longer, many more months, at that point, you will need to make a further agreement with your mortgage servicer of what happens to those payments. It may be that they go on the end of your mortgage, it may be that you get a repayment plan, or it may be that you get a modification at that point. We can't advise you directly about what's going to happen because it will depend on your individual kind of loan and your servicer. Okay, this is also a point to note that your mortgage and your insurance are tied to each other. And staying current on your mortgage right now or making a deal with your mortgage servicer so that you don't fall behind on your mortgage and you're either excused from paying for a short time is the best way to go about this, because one, it will keep your credit in the best shape possible so that it's accessible to you if you want to think about other financial options in the long term, but also because your mortgage company is a co-insured on your insurance policy, which means when you get paid out of that insurance claim, your mortgage servicer does as well. Staying current on your mortgage will put you in a better position later when you start to think about your options to rebuild or how else to use those insurance proceeds, because your mortgage company will have a say in what happens there. The big thing to know now is that if you've made an insurance claim, you should be informing your mortgage company about that. Okay, other kinds of bills you're looking at right now. Property taxes. Like your mortgage payments, your property taxes don't go away simply because of the fire, unfortunately, at least not automatically. It is time right now to think about paying property taxes because they're typically due this kind of year, and if they're not paid on time, those penalties can be fairly steep. So, if your home was damaged to more than 10% of the market value, which will be a lot of people who lost their homes or suffered significant damage, you may be eligible to file what's called a misfortune or calamity claim with the local property tax assessor's office. Upon filing your application, this will cause two things to happen. The first is that it will defer the payment of your current property tax bill that is pending without any kind of penalty or interest. The second thing that will happen is it will start the application process for the reassessment of your property taxes. Because your property taxes are tied to the value of your land and also the value of your home that's built on your land, when your home is destroyed, your property taxes should also be reassessed to give you some relief. These are the steps to take if you pay your property taxes directly to the county. If you pay your taxes through your mortgage payment as part of an escrow or impound account, you should still do this application, but there's an extra step to know about, which I'm going to talk about now. So, for many borrowers, we pay our property taxes and our insurance through our mortgage statements into what's called an escrow or impound account. The big thing to know here is that the amount that you pay is a projection of what is going to come for the next 12 months. And your mortgage servicer reassesses that once every 12 months only. So if there's a change in your property taxes, like you get a reassessment and you don't have to pay them automatically, or they're reduced, your mortgage servicer won't know about that unless you tell them. That's called a short year analysis. Requesting a short year analysis is where you are asking your mortgage servicer to look at that future projection because there's been a change in your property taxes or your insurance payments. And this goes both ways. So if you have a reduction in your property taxes immediately, you may not see that in your mortgage payment unless you tell your mortgage servicer and ask them to analyze that again in a short year analysis. In the future, if your insurance premiums increase or your property taxes go up again, you will also need to tell your mortgage servicer to reassess those, or you could also be looking at a shortage. So it's just an additional step to know about. Moving on to other bills that you may have connected to your home, and we're going to keep this brief. Basically, for your utility bills, your gas, water, and electric, if your home is destroyed and cannot receive services right now, then you don't need to keep paying that. But you do need to reach out and stop those bills from coming. The other thing to think about here is if you've set up any kind of auto payments out of your bank account, you should probably log in and stop or pause those. And there are protections because of the current state of emergency that was declared for utility customers, which can include a waiver of different deposits and fees for either disconnecting or when the time comes to reconnect. And there's a link to those there. For HOA homeowners and for people who have other kind of bills connected to their homes, we can't give you a definite guide of what to do and what happens because of the fires and when your home is destroyed. The best that we can say is that you should assume that you still have to pay those unless you can check specifically what either your CC&Rs for HOA homeowners or your other loan documents say about an act of God or the destruction of your home. And it may be easier to call that particular person to whom you pay those bills or your HOA board president to find out what the plan is there. Okay, we're going to switch now to talking about the long-term recovery process. So on the diagram on the screen, you will see that we've got one half of the diagram talking about the things to think about in the short term and how they can affect the long-term recovery. We're now going to talk about the long-term recovery and what options may be available to you. Again, this will look different for every person, so this is a general guide. Okay, we're talking about insurance first because insurance claims should be made before making any FEMA applications. FEMA government assistance has what's called the duplication of benefits rule. So FEMA will not cover anything that is already covered by other sources of benefits, which normally include insurance coverage. It can also look like GoFundMe benefits or other kinds of gifts you've received right now. So beginning with insurance. Your insurance company may be reaching out to you right now, and they may be some of the first people you've spoken to. Your insurance contract and claiming against your insurance contract is a business negotiation, even if the person on the phone that you're speaking to is very friendly and sympathetic. Treat it like a business negotiation and protect yourself by documenting everything in writing. Your insurance company is not required to be helpful, but they are required to help you through this and to be honest with you. A very helpful resource for all things insurance is found with United policyholders. And the first steps about how to understand your insurance policy, if that's where you are, can be found by looking them up online and also visiting them at the disaster recovery centers that are currently open. I want to go over some basic rights that homeowners have under the California Insurance Code. The first is when you make a claim, your insurance company should respond to you within 15 days. Now, that doesn't mean they will approve or deny your claim in that time. Their response may just be to say, great, we received your claim. Another more recent introduction or new right in the California Insurance Code is that you can use your insurance coverage for rebuilding your home under those A, B, and C coverages to either rebuild where you're currently located, where the fire affected you, at another location, or to purchase a new home. So there is some flexibility there. There are additional rights because of the state of emergency right now as well that don't normally apply. And the third one on the screen is one of those. Regardless of what it says in your policy, you have a minimum of you have a maximum of 36 months, 3 years to rebuild from the time that your insurance company gives you the first payment, and that can be extended for up to 6 months by showing or proving to them that there's a good reason for that. Other rights you have is that you can potentially combine your dwelling coverage under coverage A with the other kinds of coverage and any extensions that or endorsements that you have there to rebuild your home. There are also some rights right now under the insurance code, and also due to declarations having been made by the insurance commissioner, that insurance companies do need to continue to renew policies for a few years to come. Your insurance may be the greatest source of help for your long-term recovery, but it will require you to prove your claim. I'm highlighting this right now because it may feel really overwhelming, but there are tools and guides to help you along that path. And because there are critical points that are perhaps happening right now in these early stages that will matter over the life of your insurance claim, such as the first time you go back to your home and inspections that are happening by your insurance company and your insurance adjuster. Bearing in mind that it's important to document your losses, take photographs, and if you don't feel like you can do this yourself, take someone with you who you trust to help you document or advocate for yourself at these inspections, and to document and photograph the state of your home and any property there. Now, we've seen a lot of questions about whether or not you need a lawyer, or whether or not you should get a lawyer or an insurance adjuster to help you with your claim. Generally speaking, you should know that for many people, your insurance claim will go smoothly, and we hope that that's you. If your insurance claim does not go smoothly, you may want the assistance of an adjuster or an attorney. Insurance adjusters and attorneys can do really good work, but they are going to take a cut of the proceeds that you receive, unless you make some kind of specific deal with them. Because you're likely going to want to have as much coverage and funds available to you, that's something to consider looking at your limits from the outset about whether it's worthwhile. Generally, our advice is you can start the claim yourself, but you may need to look to an adjuster or attorney if things go wrong. The other thing here is that there are lots of good guides online with United policyholders and that have been released by bar associations and the Department of California Department of Insurance. Right now, they're offering workshops even this weekend to help guide you along that process. The other thing I want to highlight that United policyholders have is they have a survivor-to-survivor support, knowing that the insurance claim process can be really hard emotionally, and to know what other people did in that circumstance, and sometimes even with the same insurance company. Okay, the other thing that we're going to see a lot of is, unfortunately, that people have either lost insurance coverage shortly before the fires, or they're underinsured, which means they don't have enough coverage to cover the damages that have been suffered. The first thing to note is that if you were recently dropped from your insurance coverage, there are pretty strict guidelines about what insurance companies need to do in order to cancel or non-renew your coverage, including specific language they need to use and timeframes. So do not assume you have no coverage. Just check. Look back at when you were dropped. Check with the California Department of Insurance if you're unsure, because you may have coverage here. Even if you're underinsured, it is still likely worthwhile making a claim to your insurance to get what you can out of them. And also because for people who are underinsured, you may be looking at FEMA for assistance, but because of that duplication of benefits rule, you may actually need something showing the level of underinsurance or the denial in order to get help from FEMA, or at least it will help for you. For people who are underinsured, because this is a really common phenomenon, unfortunately, United Policyholders has good guidance there. So, as I mentioned, folks who are underinsured or who are without coverage may be looking at a combination of FEMA and other resources in the disaster recovery process. Hang on. Before I move on, I do also want to highlight that insurance, I'm going to go back a slide. Insurance doesn't just mean your homeowner's policy. There are other forms of insurance that you may have that you're not thinking about. If you lost a car in the fires, you may have car insurance that will help cover or replace that. If you bought Christmas gifts recently, and this may be small, but it may be something to provide comfort right now. If you bought Christmas gifts recently and they were on a credit card, many credit cards have what's called purchase protection, which can help replace items. So think expansively about other kinds of insurance you might have, other people who might have policies or umbrella policies that you might have to help cover you before you assume you have no coverage. Okay, switching now to FEMA. We're not going to go in depth on FEMA, but this is just generally that if you're underinsured or without insurance, FEMA assistance is there to help with your immediate needs and to cover some of the long-term costs. FEMA is not a loan. You don't have to pay it back, and it is tax exempt. I keep highlighting and stressing, and if you see in many other guides, you will see them highlight and stress this duplication of benefits to not claim FEMA for things where you have insurance or you've received funds, say from a GoFundMe, because the one circumstance where you may need to pay that back, which is called recoupment, is if you do submit a FEMA claim and get money for something that you had money for elsewhere. That's not something that you want to have to enter into. It's considered a form of government fraud, so that's why we're warning you about it. For FEMA assistance, for people who have some ambiguity with their ownership, maybe they live in a home that was owned by a parent who recently died, or there are multiple generations living in a home, you may still be able to get FEMA assistance by showing your claim to ownership of the property. It may be more difficult, but what I'm saying is it's possible even if your name is not strictly on title, but you are, for all intents and purposes, the owner of the home. Now, As part of the FEMA claim process, there's also going to be an inspection of the property to verify the losses. This usually happens upon 10 days notice, and you get the notice in writing to whatever address you provide. They may also call you, so provide your best number to that. It's important when you go to that FEMA inspection to advocate for yourself. The other thing to note here with FEMA is that denials of FEMA are very, very common, and it doesn't mean that you won't get assistance. What it means is it could be something as simple as you didn't have the right documents. The timeline to appeal a FEMA denial and submit additional documents or clarify something is 60 days from the time that you were denied, and you may want to reach out to an attorney for help with that. You can apply for FEMA online, but if you have kind of a complicated situation, the recommendation is to go to one of the disaster recovery centers where FEMA is operating out of and talk to them directly about your claim. And really the golden rule here is to be transparent. The other source of relief here, in addition to FEMA, are SBA loans. SBA is the Small Business Administration. Despite the name, they do also give loans for people recovering from a disaster who are not just small business owners, but also homeowners and renters. Now, the quick overview for Small Business Administrator loans, SBA loans, is for homeowners, it can only be for your primary residence. It is generally not to upgrade more than what you had before, but just to rebuild. Generally, these loans are going to be for 30 years. They are generally low interest, and they can be up to $500,000 to rebuild, and $100,000, I believe. I'm not 100% sure of that, but I believe it's $100,000 for your personal property. This also requires home inspection, and you can apply for SBA loans online or through disaster recovery centers. It used to be that you had to apply for an SBA loan before you got FEMA assistance, but that is no longer. You can do both. So this is a patchwork of financial resources potentially for recovery. So the big theme that you may have been seeing here is that you're going to be going to inspections of your home as part of these claim processes. One thing I failed to mention earlier is the part of the reassessment process for your property taxes does also involve an inspection. These are all individual inspections, so it's important to keep track of who's going out and what this inspection is for and which claim it relates to. The best way to do that is to go prepared to the inspections with all of your documentation from that particular claim, and also to go with your identification. We recommend documenting the inspection, keeping your own notes and photographs so that you have a recollection, because the claim process can take quite a while, and you want to be able to have a record of what happened at the inspection if that's primarily what's being relied on. As the inspections go on, if you are working with a contractor that you trust, or you have another friend and advisor that you're relying on, or it's just going to be, you know that it's going to be a tough situation for you to go back to your home and see it like that, take someone with you that can help advocate for you at those inspections. The other thing to note right now, because the recovery process is going to take quite a while, including the removal of debris from homes, going back to homes is likely going to be hazardous to your health because of the toxins that are involved. There are FEMA guides of the things to think about when you're going back to your home and the protective gear that you should be wearing. Okay, we're almost at the end here. I just want to highlight a couple of things that you have likely heard about where there may be predatory actors or even scammers out there right now trying to take advantage of this situation. Big picture, red flags to avoid are people or agencies who try and rush you into making a decision, people or agencies who offer you unsolicited help and immediately request your financial or bank information. You may need to give over financial or identification information to agencies that you've sought help from, but if it's unsolicited help, maybe just think twice and check their qualifications and their licenses. Ask for their business card before you give over that information. We've heard a lot about people being offered money for their homes right now. Don't be rushed into making a decision like that. And you should also know that that conduct is actually prohibited right now as of an order by the California governor a few days ago. So if you receive offers in writing or over the phone or in person from people trying to buy your home for much less than it's worth, report them to the Attorney General's office or tell us. If you've signed something that you are wondering about and you are concerned about whether you made the right decision, this is also a time to reach out for help. There's no shame in having been taken advantage of right now. These scammers are very good at what they do, and they can affect smart people as much as they can affect not smart people. In fact, people who consider themselves smart or intelligent actually often fall victim to scams more often because they consider themselves immune from scammers. A couple of scams to highlight right now and things that we've seen, and this is particularly for people who, if you've owned your home for a long time and you're entering into the rental market for the first time, if you see a listing for an apartment that is a really great price and in a really great area, and it's much less than everything else out there, and the only thing that they want you to do in order for you to see this home is send them a deposit of money up front, that is a clue for you that that may be a scam. It's quite a common scam out there. And this is just a general guide for all kinds of scams and offers that you may be seeing. If it seems too good to be true, it probably is. So pause and double check. There are ways to check the credentials of people that you may be interacting with right now. On your screen and with these slides, there are ways to check the licenses and any disciplinary action for insurance adjusters, for attorneys, and as you begin the recovery process and start thinking about rebuilding, for contractors. There's another tool that I want to make you aware of that is through the LA County Recorder and the Property Tax Assessor's portal, which is a really good online portal for homeowners in LA County. The LA County Recorder's Office offers a homeowner notification program that is very easy to sign up for. If there are any changes to your title records, say someone tries to come in and do something to mess with your title or your home ownership, this is a notification program that will send you copies of anything that's going on there. And this is something that we do on a day-to-day basis, and we have clients who we've been able to help and save their homes because they got an early notification about it through this program. Okay, areas to get further help. As I mentioned before, if you have immediate needs right now, you need to collect or get new copies of documents or talk to FEMA about claims. The disaster recovery centers that are open right now are set up for that purpose. Don't go to the DMV to replace your license right now. The DMV is currently at the disaster recovery centers and offering that service up front. If you're thinking about getting help with your mortgage and you don't feel like you can do it yourself, know that you can get help from HUD certified housing counselors. This is a free service. There are some products that they can charge for, but they're limited in what they can charge. It's a free service for financial counseling to help you make decisions and support and advocate on your behalf to your bank or mortgage servicer if you don't feel like you can do it yourself, and also identify other grants that are available for you. If you are facing legal issues that you don't think you can resolve yourself, there is assistance available through my organization, Bethzetic, as well as other organizations, including Public Counsel and HERA, and we have also seen private attorneys offering advice. Okay. Thank you so much for your patience with this. We hope that this has been helpful. We're going to start with questions now. I'm sorry, Hilda, I can't hear you right now.
I realized I was muted. Sorry about that. But yes, thank you, Amy. We'll get into a Q&A now. And we do have one question. They said, I'm currently in forbearance. What if the insurance money is not enough to rebuild and I'd rather just ask the bank to take the title, foreclosure or deed in lieu of foreclosure?
So, for someone who's currently in forbearance, the forbearance is intended to help you figure out your financial picture. Now, again, I can't give specific advice to your circumstance. Going through a foreclosure process can affect your credit and your ability to rebuild. Getting a deed in lieu of foreclosure is usually something that we see reserved for situations where not being able to sell your home or sell your land in this circumstance won't cover the debt that's that you may be facing as part of your mortgage. It is certainly an option, but just because you're in forbearance doesn't mean you're in foreclosure. The forbearance is actually to say, you know what, we're not going to start the foreclosure process. So you may have other options available to you. Whatever you'd rather do is up to you. And again, this was just a guide to give you the best financial picture for you. But selling your home or selling your land, if that is the right option for you, is still an option for you, rather than simply giving up your equity to the bank, which is what a deed in lieu of foreclosure may be. But again, it looks different for every person.
Next question is, my house has been burned down. I'm starting an insurance claim, but do I still need to pay the insurance premium since I don't really have a house to insure anymore?
That's a great question. The short answer is yes. This may look different in the long term. If you are deciding to rebuild or deciding to sell and move elsewhere, you may not want to continue to pay those insurance premiums. But one thing we know right now is that it is quite difficult to get insurance. So there are rules in place right now that the insurance companies cannot fail to renew your policy if you've been affected by fire. If you stop paying your premiums, they can cancel your policy and then you would have to get a new policy. So until you know what you're doing, it is best to continue to pay your insurance premiums.
And we'll do one last question. I was in the evacuation zone, but my home did not sustain damage. Do I still qualify for FEMA?
Interesting. So FEMA assistance, we sort of spoke about it today in terms of recovery for homeowners, but FEMA assistance is for a lot of different things. It can involve individual assistance to people because they were displaced without any kind of home damage. So in that circumstance, if your home was in an evacuation zone and you had losses or were displaced or were unable to go back to your home for a short amount of time without any kind of damage to your home, and that is the best case scenario, yes, you still may be eligible for some kinds of FEMA assistance. The kinds of FEMA assistance to rebuild, perhaps not.
Okay, that is all the questions we have for today. Um, if you all would like to have the slides that Amy has showed us, then please email us at lifelonglearning@lapl.org, and that's on the screen. This has also been recorded, so this is a reminder that you can still go on our YouTube channel and watch this over if you missed anything. And thank you very much, Amy. Thank you so much. This was really great information. I believe it'll be really helpful for people. And thank you all for joining us. Stay safe.
Thank you.